Welcome aboard, Dr. Jeff. Again, in our previous conversation, we talked about some of your background. We talked about certain unicorn bubbles and things along those lines. Following up through that, in today's discussion, I'd like to get your understanding with respect to some of the dot-com bubble that happened during 2001, following up to like financial crisis happening in 2008, 2009, and what's basically churning out now in 2024. Are there any kind of similarities that you see in these, years, or are there any kind of things that kind of stand out across these three time zones that you can point out?
Well, there's a lot of similarities. You can start with Robert Shiller, Nobel laureate Robert Shiller's book, Irrational Exuberance. He talks about bubbles throughout the 20th century, more than 10. Some of them are smaller, like like various house savings and loan crisis in America. But you're referring to some big ones. And what's
Yeah.
common to all of these bubbles is a narrative. Somebody creates a narrative that, well, this is what's going to happen. And all these benefits are come about, and everybody says, yeah, 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 and they all invest and spend lots of money. And the more people invest, the more plausible the narrative seen, because there's more people saying it. And a lot of people say, oh, everybody's saying it. It must be right. So the dot-com bubble was about the internet was going to change everything. It was going to change everything from not just business, but also the way politics is done, the way the democracy is done, and all for the better too. You could believe now that through the social media that a lot of things have changed, politics, democracy, but not for the better. But nevertheless, in the late 1990s, there was this very positive narrative, and so the share prices began to go up for these firms. And actually, it wasn't the dot-coms that really went high. It was Cisco and Intel and Qualcomm. These are the firms that really their share price went up high. So Cisco, for example, had the third highest or close to the highest. I don't know. I'm sorry. It had the highest of that time. It was and it's never reached that peak, but yet it's still a successful firm. It still supplies a lot of the infrastructure for the internet and a lot of internet services. I mean, Amazon does well, a lot of, e-commerce, news. There's a lot of remnants of, I shouldn't say remnants. I should say that there's a lot of successful services that were part of this dot-com bubble.
Yeah.
And so it's not like there was nothing left, after the bubble popped. Now, in 2008, it was about subprime mortgages. So you can get you can get a mortgage on your house for only 5% down. And people said, oh, this is great. This is going to enable everybody to buy a house. And then everybody will be happy with the house. And the housing industry is so important to economic growth that this is going to really remake America. What happened was that people bought these houses for 5% down and then couldn't pay them back. They couldn't make the payments. It turned out that they didn't have high enough salary to make the payments. And there were that filtered through the whole economy because there were, I forget the name for
Like
some type of,
Lehman Brothers and other kind of firms.
yeah, there was some kind of leveraged instrument that was used to package all these 5% subprime mortgages around and then sell them off to everybody else who invested them. And it
Right.
looked like, wow, there's no risk. But yet when people stopped paying, were unable to pay on their mortgages, that impacted on all these other people who had bought these packages of loans. And so actually, it's hard to say there's anything beneficial that came out of that bubble. Maybe you might say fintech came out of that bubble. But right, fintech is still, 15 years on, we're still kind of questioning it. So now we look at today's bubble, which is a little different in that it's so long. See, in those two bubbles, it was very quick. It was just a few years. In this bubble, we've gone, really the bubble started in 2018 or so, and it's still going on. And there's been all these micro bubbles. It's been crypto and the startups, for example, a lot of the unicorn startups, their share prices went way down in 2022. But yet
Right.
there's new things coming on, right? There's
Right.
generative AI, of course, is the obvious one, but there's all of these others that are kind of waiting. They're hoping that they have a big day in the sun. So VR and AR, right? So Vision Pro comes out. There's electric vertical and takeoff and landing that's still waiting. There's cultivated meat that a New York Times
And
article a few days ago
plant
said that
yeah.
it was a disaster, but there are people who comment on my post saying, well, no, it's going to make a comeback. So it's very different from the dot-com bubble busting because the bubble, a lot of these, the bubble didn't completely pop. It mostly popped. All the share prices went down, but it hasn't completely popped. And there's still all this money out there. There's so much money that's still out there because of the low interest rates, quantitative easing over the last 15 years. So all that money is still there. And VCs pumped a lot of money into startups. And although they can't raise it anymore, still there's a lot of startups who have enough funding to last them because there was so much money available. The VCs could not give it away fast enough a few years ago. And so some of these industries, some of these startups may rise again, right? And there are people who they really want that to happen and they're waiting for that to happen. So it's a little different from the last two bubbles.
Yeah, I mean, interesting point is that even though in the last 15 years, because of this quantitative easing that happened through the Feds, but I think during 2022, things started changing when the Fed started kind of raising the interest rates. And there was a lot of this news coming that, oh, maybe US will get into recession. Now we see even like Japan and UK are already slipped into technical recession, but at least in the US, it is being claimed that, it's not in recession. In fact, it is still going to get at least 2% GDP growth even this year.
Yeah.
So how do you even reconcile these kind of things that, at one point, the inflation, it's said that inflation has come into control a little bit, but it's not at the 2% mark, which the Fed wants. But on the other hand, you have record profits. Like if you see the fourth quarter results of Google, Amazon, some of these companies, they are doing like Meta, like it just rebounded like so. And on the other hand, you come to see the layoffs are still continuing. So now it almost seems like there is a complete disconnect between. So generally in the previous downturns, whenever there was recession or a downturn or a bubble burst, it used to result in a lot of layoffs and people losing their jobs. But once the growth started again, people would start getting employment, etc. Now, one of the major differences that I'm seeing, first of all, that there is no recession, at least in the US, at least in the public figures. If you see, they don't call it as a recession, but the layoffs are continuing. On top of it, at least in the last quarter, like in December, January timeframe, if you see the Q4 results of like Google, Amazon, Meta, they have done like excellent revenue, excellent profits, and still the layoffs are continuing. So how do we reconcile like what exactly is going on?
Yeah. Well, you're right. There's a lot of things going on, and that makes it complicated and makes it hard to say exactly what the cause and effects are. The interest rates are certainly important. I have tended to emphasize the losses of the startups more because you see these startups are running out of money. Even if interest rates to go up, they will run out of money because they're not becoming profitable. If you look at the profits of startups, the profitability of publicly traded unicorn startups, 90% are unprofitable. And that figure is not going down. It's not like these startups are gradually becoming profitable. So they will eventually, many of them will eventually go out of business because they're going to run out of money. The interest rates just make it worse for them because the interest rates rise, right? It increases their cost of borrowing, increases the cost of handling all these losses. They have all these huge cumulative losses. And so the interest, so that is an issue. And but I think for a lot of these old startups, the pre-generative AI startups, all these other startups, they're going to, most of them will gradually go out of business. There's kind of no hope for them. The question now is about these new startups, these generative AI startups. And the thing that's funny about this whole discussion, which you mentioned, which is that Google, Amazon, all these incumbents, all these big tech firms, they're the ones that are profitable. It's not the generative AI startups. They're losing, they're not only losing money, but their share prices have gone down. There's a lot less talk about them because they're not the ones doing well. It's these big tech firms. Um, Now, how are they making money? Most of them are making money for their cloud services. They're not really making money directly through AI. This is the funny thing about all of about AI right now is that the companies that are making money are doing the so-called picks and shovels, right? So this term came from the gold rush in California of 1849, where everybody's selling picks and shovels and Levi jeans and all this other stuff made money. They made money. Now there were some people who were looking for gold made money too, but by and large that was it was very skewed. It was just a few people, whereas the people who were selling picks and shovels, they all made money. They just didn't make as much money as the biggest gold finders made, but they made a good living. So people say, okay, this is the way you should make a living. This AI boom is selling these chips, selling these types of things, and Nvidia is making big money. But if you look at a Financial Times article a few days ago, that somebody investigated the discount cash flow analysis on Nvidia and found that they would have to increase their revenues by 10 times over the next 10 years
Yeah,
in order to justify this share price. The problem is that would put them at a level that's higher than the current size of the semiconductor industry. The second thing is that it assumed a 55% uh,
margin, like, yeah.
margin, when apparently the margins for NVIDIA over the last 10 years have been like, or the last few years have been like 20, 30%.
Yeah,
So it's quite unlikely that NVIDIA is worth what it is. It's probably worth like half or even less. And see, that assumes that there's going to be, there continues to be growth in AI. We don't know because it's just the cloud service. It's all these firms experimenting. There really is almost no evidence of a success story. The Wall Street Journal has run a number of negative articles on how hard it is to find success stories that I have posted. And then yesterday they ran a story saying here's the success stories, and they talk about things like somebody using a chat bot and it increases, or not a chat bot, sorry, callers, these call service where you call in for information on the company, and the human uses the chat GPT or some other large language model to access information. They talked about, 5-10% increase in productivity. So it's all these little cases, right? That just aren't going to justify the types of valuations that we've given to these companies, and are going to justify the increase in cloud expenditures. A lot of these cloud expenditures are experiments, most of which it appears are going to fail. Some will succeed. Um, so it appears that they're vastly overvalued, um, and it's a matter of time before the narrative changes. So remember at the very beginning, you asked me about bubbles, and I talked about the narrative. This is the story of Nobel laureate Robert Sherrod. There's a narrative. So there's the narrative about generative AI that's going to completely remake the economy and make us more productive. And there's a number of consulting firms that said that. There's a number of academics, very reputable economists like Eric Brynjolfsson, a number of others. A lot of business schools have made these very optimistic predictions. So there's a narrative there that supposedly justifies all of this optimism about AI. Now, if that narrative changes, then we're going to see the share prices go way down.
So I think the next question that comes to mind is like, what would it take for the narrative to change? So what I have seen in the past 1 year at least, talking to some of these startups and even enterprises who are like very keen on starting some generative AI project, because at the end of the day, every top executive wants to have at least one shiny object in their project portfolio so that they can talk in front of the CEO that, hey, I'm doing something interesting and innovation, right? Innovations means now innovation means having a generative AI project or having a chat GPT based something going on in your organization, whether it improves productivity or brings in new revenue, nobody questioning that as long as you do that. But over the last 1 year now, when the chicken comes to the roost, at that point of time, you start seeing that actually it is not resulting in any new dollar adding or improving the customer experience. And even the productivity gains that as were being touted by leveraging co-pilots, etc., are pretty mixed. Like some say it is 5%, some say 10% improvement. But we all know if you run a statistical experiment, sometimes 5 or 10% is not even statistically significant to even claim that that was
Yeah,
the actual lift that you
yeah,
saw. Or it could be
yeah,
just placebo effect, that because I have
yeah.
been given some medication, definitely it should be helping me, even if
Yeah,
it is water, right?
yeah.
So possibly I think this leads me to think about, given that so many investments have happened, even with the funding winter and even with all the crunch in liquidity that we have seen over the last 2 years, uh, the AI startups or the generative AI startups seem to still be getting this funding. What would it take to change the course, or as they say, disrupt the narrative, which is that okay, somehow generative AI is going to save us and will somehow bring some magical experiences that we have never seen before. For instance, like Gemini launched 1.5 version, OpenAI launched, Sarah, which is like their like video kind of a platform, etc. So, what would it take for shifting in the narrative, and when do you think that that might happen actually?
Well, one possibility is the earnings, right? So far, it's been earnings of these big tech firms who are offering cloud services. What we really want to see is there evidence from users of AI that AI is having an impact on profits or productivity or something, right? And so far, there hasn't been a lot of stories about that. Now, maybe that's just because they haven't made enough announcements. I don't know. So we haven't finished all the announcements for the fourth quarter of 2023. There's also an interesting statistic that often comes out, which is the percent of the number of times that AI is mentioned in earnings announcements. This is one of those things that people demonstrate, use to evaluate these things. And at the end of the third quarter of 2023, that percentage had gone, the number of times it was mentioned had gone up a lot. So that was used to justify what's going on. So I keep looking for the statistic. I don't know when it's going to come out. I mean, maybe, maybe it will be substantially lower than the last quarter. Maybe it'll be about the same, And so unless it's substantially lower, there probably won't be a downturn, a very big change in the narrative. But if there is, then the narrative will change. So that's one thing that we can
Right.
wait for.
Yeah, that makes sense. I think one thing that stands out, that as long as the narrative is there, a lot of people start saying the same thing. You start seeing the whole media also starts publishing those kind of narratives. So it's like almost like you scratch my back, I scratch your back, and the whole industry starts talking the same words. And as you said, even in the the conference calls of all the public companies, quarterly results start having those keywords, whether it is microservices, whether it is cloud, whether it is big data. Like we have seen these keywords coming again and again across the tech industry. I think the question that I have in my mind is that, uh, and at least if we were to look back, not too long ago, but just 2 decades back, right? Whether it was dot-com bubble or whether it was a subprime mortgage crisis in 2008, 2009, uh, technically people used to think that in every like a decade or so you will hit a like a kind of a within a decade like a recession. So if you were to see from 2008 2009 onwards, we are way overdue for a like a shift in the kind of market. And a lot of people predicted in 2023 as well that there would be a like in COVID times, a lot of people were predicting there is a recession, but artificially there was a lot of stimulus provided to the industry, and hence it kind of shifted for at least two more years. But people were expecting in 2023 there should be a big recession. What do you think is keeping the economy at specifically in the US like above the water, like, and even with all the job losses, the unemployment report comes keeps coming like solid, like they still showed like it is unemployment numbers are still under the radar, economy seems to be doing good. How do we explain this kind of a thing when I hear a lot of people in the tech, they keep crying that they are not getting any raises in their companies. There is a constant like push on to improve productivity. A lot of people are burning midnight oil, and then many of them are losing jobs left, right, and center. Like, so they don't have
Yeah.
that, they don't share that kind of optimism, which seems to be there at least in the US federal government thinking.
Well, the simple answer is government spending. The U.S. government has just spent so much money over the past 5 years, 5 years, record amounts of spending, and I think the U.S. debt, government debt, is 30 trillion about, and I
Yeah.
think it was 20
Yep.
trillion about 5 years ago,
Mhm.
and it's gone up, a lot because of the pandemic spending. So Trump started it, spent a whole bunch of money. Uh, and then Biden continued it. So there's so much money that's been pumped into the economy, and it's all out there. And that's in addition to the low interest rates that have existed for so long. And so this keeps the economy going, but it also could cause it to slow down because a lot of people are concerned about the competition for funds. So when you've got the government having to borrow so much money, to release so many government bonds that have to be funded, they're pushing out other types of loans, right? Companies want loans, but here's the government asking for a lot of money, so that pushes up the interest rates, or that's the worry. So even if inflation doesn't really go back up a lot, this competition for funds could cause the rates to go up again. And so that briefly occurred a couple months ago. It went from 4 to 5% for the 10-year government treasury loans. Then
Treasuries.
it went back down. And so there's this change in kind of what people believe. It's very volatile. And I'm not an expert on a macroeconomist. I mean, I'm an engineer and a scientist. I just read some of the articles. So
Yep.
there's a lot of uncertainty.
No, so you're right. I mean, the good part is nowadays, the tech industry, like, is the one that moves the needle on the Nasdaq, right? Like, all the top stocks are tech. So if I were to remove Apple, Microsoft, Google, let's say Nvidia and Meta, and Amazon, then basically you're wiping away the entire, movement. So if any of
Yeah.
these moves, the whole index moves basically. So
Yeah.
even if we claim that we are more from tech and scientific field, you can't like decouple the economy with the tech, because tech is now becoming the main. Like, I remember back in the day, almost, you must be knowing much better than me. Like, even a decade ago, you used to have ExxonMobil, and like oil companies used to be the one who used to be the most valued companies, not the tech companies. Even during the
Well,
dot com.
General Electric used to be in there.
And yeah, General Electric used
Yeah.
to be
Yeah.
big. I remember Shell used to also sometimes hold a top ranking, but
Yeah.
they generally like more like infrastructure, or like oil. Oil companies used to be top 10, like most of them. Gen,
Yeah.
uh, uh, but now they are all gone, and it's all
Yeah.
tech. At least in the
Yeah.
last 5 to 6 years, it's all about
Yeah.
tech. It doesn't matter
Yeah.
which, it would be a tech, and
Yeah.
all of them are American companies. Like, none of them are from anywhere else.
Yeah.
Tech and everything,
Yeah.
like, get all
Yeah.
the like the from a valuation perspective.
Yeah.
So this is an interesting shift. So seeing where it is just from a technology standpoint of view, do you believe that this is a trend that we are going through is going to last, or this is just a phase that tech holds such a high importance in the overall macroeconomic condition, that the tech has such a big power now, which it never used to have even 10 years ago?
Well, there's a lot of facets to that issue. I mean, one is that uh, they're all overvalued because AI is not going to work out as well as they think it is, that some think it will. So that's one argument. Another is that there's a lot of legislation going through America. I mean, even more so in other countries that are mad about the impact that these tech companies have on economies, and how they make it hard for news companies to survive, and a lot of companies to survive. So it's very likely that you will see increased legislation, and even in America, I mean, some of it is just driven by uh, people angry that their kids are watching all these videos and stuff, and bad things are happening. They're getting abducted and kidnapped by old men and stuff like this. So there's a lot of things that can happen. Uh, when something is very high, a lot of times it comes down. There's something called regression to the mean, where you things don't just keep going up. A lot of it is just it's just kind of That's the way a stochastic system works, that sometimes things go way up, but then they often come down. So, I mean, I would, just on that basis, I would say that you should be careful investing in stocks that are that high, because generally they come down. I mean, you look at the history of the stock markets, and that happens. Stock markets go up over time, but they don't just go up in a straight line. There's lots of ups and downs in there, and so there's likely going to be a down very soon.
Yeah, I mean, it is interesting because for Nvidia, we can clearly see it is purely backed on the the shoulders of generative AI that the stock has risen in the last few months, gone all the way to even now surpass basically both Google and Amazon. It's like 1.8 trillion, whereas Google is also like 1.7 and Amazon also around 1.7, whereas Microsoft and Apple are both 3 trillion. Uh, I mean, at least the claim for AWS is also have Anthropologic and like a AI provider. Google is also having Gemini AI provider. Uh, Nvidia, we already know they're a hardware provider, so they're also selling Shovel for the gold race for AI. Microsoft anyway is backing OpenAI, so they also have. What explains Apple's rise at 3 million? I mean 3 trillion, given that they don't have any specific say in the at least in the AI race except for the iPhones, etc. And just 1 or 2 years ago, only Apple used to be the one near that 3 trillion mark. Somehow Microsoft got, maybe because of the AI and their backing OpenAI, etc. They saw that kind of a like a ramp, but Apple still retains their 3 trillion type of mark even now, and they don't have anything at least substantially in the area of AI, while all the other players which are in that league seem to have something to do with AI as well. So how does
That's a good question. That's a good question. They make a lot of money off of iPhones and iPhone services. A lot of iPhone services. They make 30% off these app sales. Uh, and the funny thing is that I'm not sure why people think that iPhone is better than like a Samsung phone. I mean, my wife has owned an iPhone for years and years, and both my son and I, we've used all of them. It doesn't seem that much better, but people think that it's better. And they think that Apple's going to come out with something big. They think that Apple's got something hidden back there that they're going to come out with in terms of AI. And even this Vision Pro, a lot of the reviews aren't very good. That doesn't seem to slow Apple down. I suppose a lot of people are saying, well, just wait for the next one. That was just first one.
first
And
one?
they ignore the fact that there's been various virtual reality devices coming out for the past 10 years,
Yeah.
tons of them. And what I really find funny is that people don't notice that they're not getting smaller. In fact, the Vision Pro is bigger.
Yeah,
So,
it doesn't make sense.
people think, oh, tech products, they always get better. Well, not always. And so it's a good question why Apple still has a high share price. I would say that it's mostly because people they think that Apple's great and they think it's going to come out with something.
I mean, does it have to also do with like a status symbol, like Apple is the Mercedes of the cars, or probably Michael Kors of the like handbags or whatever fashion
No,
accessories?
no,
Is
you're
it
right. You're right.
so?
Yeah,
The Android they think is more for developing world, not necessarily for the first world, and hence anything to do with Apple has to be charged for the
yeah,
premium. And why would Tim Cook not like it? Of course he would. People are willing to pay, stand in the queues and buy the new latest Apple products. So
yeah.
great. I mean, it's a great conversation again, Dr. Jeff. It has been a pleasure like hosting you. We are coming to the end of the podcast, and I would like to open up for like if you have any parting words, last words, but it has been a very great conversation here before we wrap up.
Well, I think this is a unique time in tech history, and I think that when people look back over this, I think young people should be really paying attention because they can learn a lot. Because I think that in 5 years they're going to look back and they're going to say, "Wow, people were too excited." Right? So people should be paying attention and to be under trying to learn from this bubble.
Yeah, that totally makes sense. Before I let you go, I just had one final point to make and maybe get your views also on that. So we have been using this term AI, artificial intelligence. In my own understanding, sometimes I believe that we don't even understand how our damn own mind works, basically, like how neurons are fired, what makes us think, what gives us illusions, how do we infer certain things, why do dream comes, and like how do we even get intuition of some things? We call it deja vu, etc. And why human beings only learn very limited amount of things, still we are able to extrapolate and all, even in unfamiliar circumstances. We don't have to read encyclopedia before we start becoming operational. Even kids having no knowledge of any major communication, etc., are still able to like respond to the external stimuli, etc. How are we calling what we are doing right now as AI, which almost seems like it's just some sophisticated machine learning on top of what we already had from years ago, right? Like maybe 30, 40, 50 years ago. And all we have is that we're feeding it more data and throwing it more compute at it. Is it really AI as we understand it, or am I
No,
missing?
no, I agree with you. It's not AI. We're nowhere close to really intelligence. It really is mostly machine learning statistics. And but the term AI has been around so long, people like it. Right? People like the term. People like the term robot. People like to think in terms of robots being like people, so they like to think of computers as thinking like people. It's just what people like. It's not anywhere near accurate, but you make an important point because people should step back and realize, hey, this isn't intelligence. This is just machine learning. I mean, I don't know how many times engineers have told me that. I've asked them, what do you think of AI? And they'll say, well, it's not. It's just statistics, just machine learning. It's not intelligence. And that's important for people to remember that.
Yeah, no, thank you, Dr. Jeff. It was really very happy to learn from you and like have these exchanges. I think, it will be great to, bring you on board again sometime. But thank you for your time today, and I'll wrap up here and have a good day from here.
Okay. Thank you.